Hey, good afternoon, traders. This is Trader Tim from EminiMind, and I'm doing a Monday market analysis video. It's the 6th of December, 2021. This afternoon, we have the E-mini Futures Masterclass, day trading masterclass, that'll be going on this afternoon, evening. The class itself is full, but I do have the recording will be made available, so you can shoot me an email if you're interested in that, tim@eminimind.com. And we'll be going over all things related to intraday futures trading using the halfway backs, the fibs, and just everything surrounding my kind of bread and butter for day trading. If we take a look at the daily chart here on the ES, we can see a pretty solid bounce off the next halfway back long. The last 2 weeks or so, I've kind of been targeting this 4,500 level, and we came down right to just below it, 44.92. You notice we have those prior highs as well that acted as support. And if we zoom in and draw up the short, you can see we're basically right about at that 46.16 short. We got about 2 hours left this afternoon until the markets close. Now, this year, we have not seen a lot of these full halfway back shorts hold. So what's been happening this year is we break the swing low back here. So you have an uptrend. That's been basically the trend all year. Nice strong uptrend. We break the swing low. And this maybe happened half dozen times this year. We've traded at the halfway back short, the very first one. That's been a great short opportunity. Capitalized big on this particular one. Rode that down to the halfway back long, and then the second one got a little bit of a reaction here last week. At the end of the week, we closed at it, then we opened and sold off, but we kind of really only made a double bottom, not much more than that. And then today you can see we're breaking that second halfway back short, and we are right at the full halfway back short. So given where we're at in the year, coming into the last couple of weeks of 2021, this would be kind of your last opportunity probably to get short on a swing time frame. And even if it just went back down to 4,500, that's a decent move, but it would not surprise me if this one takes off a little bit from here. So if you are going to put on a hedge or put on the short, I would just be sure to have your stop, even if it's just a mental stop. If you're using options, a move above this swing high at a 46.50.75, that would be my exit point to close out the trade. Now, we had a really good start to the week. Well, a great end to last week and a great start to this week. And the reason being the 15-minute breakout trade that we've been taking every single day on Friday just really ripped or sold off hard. So this is the 15-minute chart. And we broke that first 15-minute candle, got short, and it was just down, 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 down. Was able to trail all the way down like 7 bars in and close out down here. And then this morning, we broke the first 15-minute candle, which happened to be followed up by an inside bar. So this first 15-minute candle ended up being the high and low for the first 30 minutes as well. That one broke over here on the third bar, and then just trailed up to this next little 15-minute candle, and that was a nice little move as well. Now, if we zoom in a little further to the 512 tick chart, and let me go over here, the top of the first, get rid of some of these lines, top of the first 30 minutes is here. This gray line also happened to be the top of the first 15 minutes. That's just the way it worked out. We had a lot of sideways chop for about 20 minutes in here, 25 minutes where we just didn't do much. But notice once we broke out above that first 15 minutes, then we got a strong push, and then it was kind of a flat from there over through the lunchtime session. But when we broke right here, let's come into, what did I have? That was about 8, little after 8, or a little after the top of the hour. So here's that 45, 70, 50 where we broke the top of the 30-minute range. And just taking the next setup, that pullback lines up with the top of that breakout. So you're getting long on the pullback. You could get long on the breakout on the 15-minute bar, or you can get long on the pullback. And so in this case, the halfway back long set up beautifully, traded up to -23, had these little pullbacks on the way up, so you were able to kind of bring your stop up underneath each of these red candles, and then ended up getting taken out up here below this cluster, just trailing the swing lows on the way up. We had this little poke above highs here, and then once we sold off over here, that's where it took me out of the trade. And then we just kind of crapped out the rest of the session and didn't do a whole lot. But if this setup were not to have gotten follow through and traded higher, then what I would do is, let's say we came down and broke the 61.8. If we broke this swing low down here, then I would be looking for taking a short. And I'd be looking for that short, the 50%, to line up sort of with the top of the first 30-minute range, that gray horizontal line. And I'd be looking for resistance at that point, and then looking at shorting at that level. And anytime we kind of poke our head above the top of the first 30-minute range and then fall back down below it, we have a good chance of going to the other end of the range, basically trading down to lows. And so a good way to stay patient, or help keep you patient throughout the day, is to look at that top and bottom of the first 30-minute range and look for trades around that area. Looking for trades at halfway backs that correspond not just a halfway back on the 512 tick chart, but also a halfway back that corresponds, on the 512 tick chart, that also corresponds with the halfway back on the 15-minute or the 5-minute chart. Those are good places to be looking for trades. Anytime you can draw up a retracement from a swing low to a swing high, even if it's slightly different than the next guy's drawing, looking at that halfway back, that 50% area, to then come into the 512 and find that point where we come down and touch the 50%, and then draw up your micro 512 tick chart and taking the halfway back there, the 50% at that point. Those are really good areas to be looking for trades, and it helps keep you more patient as opposed to just coming in and taking every single one of these little retracements on the 512. When volatility gets really hot, as it's been, and we're up in kind of the upper 20s, mid 30s, you get a lot more activity printing on the 512 tick chart. And so leaning more on the 5 and especially the 15-minute time frame can be a really helpful way to remain patient, because it kind of slows you down and makes you say, okay, here are the areas that I'm going to look for trades in the 512 tick chart. I'm not just going to rush to the 512 and just start taking every single setup that pops up. The last thing I wanted to touch on today is actually in Bitcoin, because the chart has set up in such a way that we see happen a lot on the futures markets in general. So we have, I'll go to a daily, see if I can, we'll go to weekly, a little bit cleaner. So on the weekly chart, we have we have a halfway back long that traded down here at 41,000. And then see how we went through the negative 23% target up to the negative 61.8. Rather than drawing the next traditional low to high retracement, which would be from the swing low here up to highs, what I prefer to do is to draw the full halfway back. So meaning coming all the way back to where this original retracement started, the original retracement that we went not only through the negative 23, but because we made it to the negative 618. And side note, the negative 618 is a great place to take profits. So luckily I was able to close out pretty much the rest of, I converted most of what I had left in Bitcoin to Ether, but what I did have left, I closed out at 69,000 and looking to buy it back down here at the full halfway back long, which is kind of right about where we're at. So once you make it beyond a negative 23 all the way to a minus 618, that's when you want to pull the full halfway back. And if we zoom out even further, we can see, I mean, let's go to a monthly here, that if we look at the kind of the low back in 2018 to last year's high, or the high at the beginning of this year, excuse me, that 50% at 34,000 has a target all the way up at about 80,000. So this is sort of a secondary halfway back within the larger retracement. And so as long as we hold, 44,000 on Bitcoin here, then I mean, look at both of these targets kind of shoot you at the 80,000 mark. So obviously with the crypto space, you want to be playing with money, so to speak, that you don't need to get to right away. If you get a big push up and you have an opportunity to take some off the table, great. But you don't want to get stuck, putting a big position on here at the 50% and having that larger 50% below us with the 61.8 down here at 27,000 roughly. If you say, well, I'm gonna buy and hold, or I'm gonna add to it as time goes on, you don't want to get stuck having to pull that money out if we come down to 30,000 and just get scared out. So positioning sizing is super important, and if you don't really care about crypto in general or Bitcoin, that concept of when you are trading at a 50% and you make it all the way to the minus 618, drawing the full halfway back as opposed to the next retracement from entry to highs, that's a little bit better approach, and you can use that on the ES as well. Sometimes you see it on the micros, not quite as applicable because the micros are such a small time frame, things move a lot quicker. But if you're looking on a daily chart, that will oftentimes happen. So like up here on the daily and the current ES, we didn't quite make it to the negative 23, so I'm just drawing the next retracement. But if we would have gone another 100 points or so and made it to 48.50 up at that negative 23, then I would just use this low as my anchor point and extend this anchor up, and now you have the full halfway back. What ends up happening is it's kind of an overextended situation if you make it to the negative 618, and so then there's kind of that overcompensating, and you end up pulling back a little bit more than if you just kind of slow and steady, incrementally make your way up, pull back, make your way up, pull back. And that's why you hear me say I like these pullbacks that we get here, even though it might scare some people out of longer term positions, or people start thinking, oh, the economy's gonna go down the toilet and we're going into a recession just because the stock market dipped for a week. As long as you don't get freaked out by some of that stuff, you can really take advantage of these 5 or 10% pullbacks sometimes to put on a bigger add to your longer term position, or simply just capitalize on the short term move down by buying puts and hedging or swing trading, and make some decent money on these little swings. So I hope everyone has a good week and a nice start to the week here. And I'll be talking to some of you later today in the masterclass. And if you want to get a copy of that, I'll have everything, the materials and the class itself, the recording, ready to go tomorrow. And you can shoot me an email, tim@eminimind.com. Thanks, and have a great week.